So one of the things we've seen, particularly in the sort of post-COVID era, is the regulators starting to clamp down on pretty much process and procedure. So, if we look at the environment post 2008 and the financial crisis, there was a lot of regulatory reporting. Regulators wanted to know from a data perspective what firms were doing and why.
Hello, you're watching Proactive. Joining me is KRM22 CEO Dan Carter. Dan, very good to speak with you. For viewers new to the story, tell us more about KRM22 and what you do.
Yeah, hi, Stephen. Thanks for having me on. So KRM22 coming up to our 7th birthday, having founded back in 2018. So we set out 7 years ago to essentially build a platform that allowed capital markets firms to complete risk management in a more sort of holistic sense. So we'd seen through sort of the early 2000s into the 2010s that firms in the capital markets had concentrated very much so on the trade flow. And if you go back to sort of conferences from around that time, big buzzwords were sort of straight through processing. But no one was looking at risk in a joined up or holistic integrated way. There were a lot of firms out in the marketplace that had built very niche siloed risk tools, but none of them were either integrated together or joined up in that sort of holistic risk type way. So we, as your viewers would have heard back then from Keith Todd, we founded the business, raised some money and acquired some of those niche tools and started bringing them together. So 7 years into our journey, that integration is going very well. We have a suite of 4 applications across the product, broadly split into what we call trading risk and corporate risk. On the trading risk side, that is looking at your classic sort of intraday risk management, whether it's credit risk or market risk. And then we've added some workflow tools around pre-trade limit management, where firms, particularly big FCMs, struggle to manage the change within those limits. And we've built a nice workflow tool that allows them to do that, and then integrated those two sides together. So where risk managers are looking at changes from a client account in terms of those pre-trade limits and whether they should be approved or not, being able to supplement that information to the risk manager with real-time risk metrics of P&L, margin, stress, scenario results, and value at risk VAR. And then more importantly, once that decision has been made by the risk manager, saving that into the audit trail. So from a retrospective, they can look back and say why they made those decisions at that time, where markets would have been previously. So that's the trading risk side. On the corporate risk side, we have a couple of other products which broadly focus on surveillance. So a complete market abuse tool, which has around 84 different alert types that range from all the classic sort of spoofing and wash trading. And that product's been out in the market for over 20 years and been very successful for us. And then we have our cockpit tool. And the cockpit is designed to help firms bring that risk together. So that holistic risk or enterprise risk, as some may call it, but trying to make it more data driven. So a lot of these firms will be doing risk assessments that are predominantly done in Excel. They're sent round to the various stakeholders within the firm. They'll put a finger in the air on a red, amber, green sort of status, but not much of it is actually recorded in a sort of data-driven way. So we've essentially created a sort of digitized risk register that helps bring those data points together and validate the assessments that the stakeholders are doing. And so, yeah, 7 years in, we're going quite well and have a really good suite of tools that's helping those firms join those areas of risk together.
Dan, is risk a moving target? Does it evolve, particularly as global regulatory regimes become more stringent?
Yeah, so one of the things we've seen, particularly in the sort of post-COVID era, is the regulators starting to clamp down on pretty much process and procedure. So if we look at the environment post 2008 and the financial crisis, there was a lot of regulatory reporting. Regulators wanted to know from a data perspective what firms were doing and why. And we saw MiFID II and Dodd-Frank, et cetera, come in. A lot of firms spent a lot of times complying with that regulatory reporting. And what we see at the macro level coming out, as I say, out of the COVID era is the regulators starting to really police more stringently firms on how they are, whether it's managing limits or managing intraday risk. And so one of the things we say to our customers quite regularly is that our system has been designed in a very configurable way, in that you define what your risk policy is and how you want to manage pre-trade limits or intraday risk. And our tool will help you evidence that you are doing so, whether that's to an internal auditor or an external regulator. We've also seen instances where firms are starting to be picked up by the regulator and given the odd sort of slap on the wrist, which can be quite sore from a financial perspective, and that's driving them towards some of our tools, which help them mitigate those sort of regulatory fines that can come along if you don't have a good process and procedure in place.
Because I wanted to ask you that, has this kind of growth in regulation fed into your own growth, particularly post-COVID, Dan?
Yeah, so we've broadly been growing ARR at around 20% since the sort of COVID lockdowns. Obviously, during COVID, a lot of our target firms moved home and went into a very survival sort of mode, and new risk systems probably weren't top of their agenda during those years. As we've come out of that with the regulatory environment and firms coming back to a new normal, they are starting to look at the tools and applications that they have in place, and where these instances of regulators coming to knock on the door, we can help them with that with our tool set. So that's driven some of our growth. We launched in early 2022 our Limits Manager product, which integrates via APIs to ISV trading systems and then exchanges. And it downloads all of your accounts and account level limits and provides a workflow tool, as I mentioned earlier, around those changes in limit management. What we've seen as we've deployed that tool to a number of firms is that particularly the big firms have so many accounts and so many options that they can set on the pre-trade limits that it's a bit of a bit of a sort of moving target for them in terms of how to manage that. And our tool helps them not only manage that on a day-to-day basis, but provide that audit trail, as I say, for either internal audit or external regulator of how they're controlling those limits in those upstream systems. So yeah, been a big driver for us last couple of years.
You mentioned that growth in your ARR, Dan, and of course it's been given another boost just recently. You announced a new customer at the beginning of, or new customer contracts at the beginning of March, adding to that ARR, which is now sitting at about £7 million a year.
Yes, that's right. A great milestone for us as we move to hopefully cash generative and profitable business in the short term. And that was a real big win for us because it was one of the first clients, actually the second one, who had taken the Limits Manager product first to implement that sort of workflow and standardization of limits in one place, and had seen the real benefit of then taking the Risk Manager product to bring those real-time risk metrics in alongside. So when an account comes to them and says, okay, I want to extend my Brent crude futures limits from 50 to 100 of a max position, their risk managers can look at the account, look at the real-time data of what the standing of that account is, whether that's P&L or VAR or their own risk assessment, and then when they approve or reject the change, we track all of that in the audit trail, which back to the regulatory report helps them massively, not just in an efficiency of time, but actually evidence to the regulator. So it was a really great one for us to win, and hoping to do so with a number of other clients that are taken either Risk Manager first or Limits Manager first. So yes, good start to the year.
So what's next then for KRM22, Dan? What should your investors be looking out for?
Yeah, so we are continuing to grow. We're looking to continue that growth rate of broadly 20% that we've been achieving post COVID. We are driving. We've always, as a SaaS software company, we do quarterly releases in each of our applications. So the feature and functions within is continually evolving. We're starting to look towards some sort of AI methodologies, particularly in the surveillance space, where it can help us target things like near misses. So our surveillance tool has always been very black and white in terms of you set your calibrations and the trading activity either falls within or without. The FCA would like firms to look more at near misses, and we think that AI can help us with that. So we're early on that journey, but looking forward to see what we can do there. And yeah, a lot of our clients take one of our 4 applications today, but they're starting to really see the benefit about using more than one. So we see big growth potential from a sort of cross-selling perspective with customers that we've already got. We've done a lot of hard work with vendor onboarding and info security, as a SaaS-based firm that holds very sensitive client data for these organizations. So yeah, we're very very positive about what the next couple of years holds for KRM22.
I hope you'll keep us posted on any progress with all that, Dan. Thank you very much for speaking with us today.
Thanks very much.
That's KRM22 CEO Dan Carter.